started. We've got a guest speaker today. This is a really funny story. Our guest speaker that we had planned for today canceled again last minute. Everybody's been super busy, getting sick, so that's kind of what happened. But Andrew Mcdowell here, right? Mm-hmm. Walked in yesterday morning with his son. I was just checking out the store and started talking about yield farming, and actually he has enough knowledge to be able to teach a class, and so I invited him to come and be today's guest speaker. So he's going to talk a little bit about DeFi and yield farming. So Andrew, I'll let you introduce yourself.
Thank you so much. So as Jonas said, I'm Andrew Mcdowell, new to St. Louis, so happy to be here. Let's get started real quick. All right, so I didn't really know what the format of this was going to be, so we can skip all this unless anyone feels compelled to share. Any hands? No? All right, I'll share about myself. So I already said Andrew McDowell, he, him's fine. I live in Creve Coeur now. I just moved there in November. I lived in Germany for 2 years before that, and then Northern Virginia for about 10 years before that. So I got into crypto seriously about 8 months ago. If anyone remembers, like, we had that big drawdown in May from like 2.6 trillion to 1.3. I got in like the day before that happened. So yeah. I don't know. I'd say I'm like, I don't know. I guess you guys can judge my crypto expertise today. So we'll see how good I do. Does anybody have anything they want to know about DeFi? Is anyone here in DeFi pretty heavily? Does anybody yield farm? Raise your hand if you yield farm. You yield farm? What platform do you yield farm on?
Sovereign.
Sovereign?
I don't know. I use
𝐦𝐸𝐿. Okay, so you can stake on 𝐦𝐸𝐿. And then you back there?
I'm working on a couple of different projects on Cardano that are launching.
Okay, so those are like brand new. Yeah, okay, cool. All right, so it looks like this might be useful. This is very basic, so hopefully everyone can follow along. All right, so we're going to learn about what DeFi is and how it's different from traditional finance. I'll probably gloss over some of the products you can get. I'm just going to focus on exchanging and liquidity providing. And then we're going to walk through the DeFi stack. We're going to do the top level last, so that might be confusing. And we're going to talk about beefy.finance. So beefy.finance is a, I guess, it's a yield farming optimizer, automated market maker, and also a DAO. So if you own the Beefy token, you remember the DAO, you have governance rights, and you also get a revenue sharing. So we'll talk about the Beefy platform and also the token a little bit. So this is a traditional financial system. You're going to have to work through several intermediaries before your whatever value you want to transfer gets to the end user. Also, like if you want to take out a loan or insurance, you're going to have to work through some kind of intermediary like a bank or some other agency. In decentral finance, it's all driven by the protocol. So it's all in smart contracts. It's all immutable. It's all open source. So you can see exactly what's in there. I can't read Solidity or Rust, so I have a hard time. But that's why I rely on people like beefy.finance to tell me what's in it. So get down to the next part. All right, so here's the stack of what decentral finance looks like. So you have your application layer. We're going to go through an example. We're going to use Uniswap today as our example. So they are Ethereum, decentralized application, also decentralized exchange. The protocol layer, we're just going to talk about exchanges mostly. You can do loans, derivatives, insurance. There's all kinds of stuff that's being built. You can like do futures trading on your yield farming. It's ridiculous, like just the complexity that's being added constantly. Then we'll talk about the asset layer and the settlement layer all in one. Ethereum is an asset, and also the Ethereum blockchain is the settlement layer. So we'll just use that as an easy example. Something like Polygon would be a separate asset layer that uses like Ethereum as the settlement layer, if you're familiar with like Polygon and the Matic token. All right, so this is an example of a decentralized application. When you see a decentralized application, there's always going to be a thing that says connect wallet. You're going to want to use like a Web3 wallet like MetaMask. Anyone use MetaMask? A lot of okay, it's almost everybody. Okay, good. Like that's what I use too. So, and I don't have any problems keeping a lot of money on MetaMask. It's a hot wallet. People think that it's risky, but just so I use a virtual machine to kind of firewall off all my trading, and I don't click on anything that I don't click on my regular machine first to verify what it is, and I only do like trusted sources. So this is what you're going to see when you click on Uniswap. It's very basic. The first, I guess, application is the swap application. That's the default application. Then the next one is the pool. There's also voting. So if you are a Uniswap token owner, you can vote on platform governance. There's different proposals. We'll get into more of that later. All right, so the application layer, these are some terms you want to know. So DApp is just a decentralized Web3 application. You've probably seen that before. It's probably nothing new. Automated market maker. This is a little bit more confusing. In like traditional markets, like the stock market, there's always like a market maker and a market taker. There's a buy side and a sell side. Uniswap can do both based on whatever kind of outcome they're trying to achieve. So if they have a liquidity pool that wants to maintain a 50-50 ratio, the one we're going to use is USDC and ETH. It will constantly buy and sell the assets to maintain a 50-50 pair. Whereas some liquidity pools, they don't care if they get out of balance. They rely on the users to provide the balance. So you get incentives to add in the token that's low or take out the token that's high. That's more like an advanced level course. And then decentralized exchange. If the Uniswap team went away, you could still use the platform. It's just there's no central control over it. It's all smart contract driven. All right, so then the protocol layer. I mentioned that when you connect to the Uniswap DApp, there's the swap protocol and the pool protocol and also the governance protocol. We won't talk about that today. All right, so here's an example of what you'll see when you choose the swap protocol. So I just used an example of 100 USDC swapping to Ethereum. It's going to give you the market price for Ethereum. They use price oracles like Chainlink. Does everyone know what a price oracle is? All right, we'll get into that next. So it says right here, if you're going to give your 100 USDC, you can expect to see at a minimum 0.025 ETH, which, you know, there's 25% slippage there. That's the max slippage. We'll get into that as well. And here's kind of the route it takes. So you're going to use Uniswap v3 USDC. It's going to go into the USDC Ethereum liquidity pool, and you're going to get some Ethereum out of that pool. The people that provide the liquidity in the pool, stake their USDC and Ether, and they get a percentage of that fee. So you're automatically going to pay 0.05%. You're going to pay 50 cents of your USDC into the pool, and the people that provide the liquidity are going to get those fees. A portion of those fees, I guess. So, does that make sense? Everyone tracking with that? Okay. Anyone not? Is anyone confused? Am I confusing? Am I going too fast? You're confused?
I'm just gonna watch.
Okay. Well, we can talk more later, and we can maybe do some demos or something to make more sense. All right. So the protocol layer. So those prices above, those are all determined by the oracle. So Chainlink will go across many automated market makers and see what the last buy and sell price were, and that's how you get like your pricing information. Slippage price impact. So sometimes there's like a difference. There's pretty much always a difference in what someone wants to buy something for and what someone wants to sell something for. So that's called the slippage, and you'll see that a lot in DeFi. And then the spread is also has an impact on the slippage. So if there is part of the problem is if there's like an illiquid market, like there's not a lot of liquidity out there, you'll have a high slippage, and that's because the spread is so wide. But something like USDC, Ethereum, those are very big market cap assets. So there's like broad liquidity. You're not going to have a lot of slippage. Try to think of something that has like a very low market cap.
I tried to buy Secret on
Okay.
on Bit, and I have an order that's been
Okay, so there's no liquidity there to execute that order. Yeah, so like any new coin, eventually you have to sort of, if you're going to launch a coin, you're going to want to provide liquidity yourself. So a lot of projects will do like 5 or 10,000 USDC just to add liquidity from the get-go, and then the users will add more hopefully later. All right, so here's an example of the Uniswap USDC Ethereum pool. So what you're going to do is deposit either or of these assets, or you can create your own liquidity pool token and deposit that. You can see here the total value locked of all these assets is about 346 million. The 24-hour volume is about 74 million. That means that there had been $74 million worth of trades between USDC and Ethereum on Uniswap in the last 24 hours. The 24 hours fees, that's about $222,000. That's this 0.3% right there. So if you remember from our screen before, there was a 0.05%. 3% is going to stay in the pool, and the other 2% is going to Uniswap to either buy back their token or do some other, add to the treasury. I don't really know what Uniswap does with their funds, but. And if you are a holder of this asset, if you have this asset staked on Uniswap, you can expect to see about 7.7% annual percentage yield. So that's what you're going to see. It's basically like break even with inflation. Like you'll see, go ahead.
That's on USDC, right? Specifically?
That's on this pair specifically. Yeah. So we can get into some more like how that's determined, or there's a lot more lucrative pairs than this. This is just a very safe, because you're also going to benefit from Ethereum price appreciation. So as the price of Ethereum goes up, your liquidity token value will go up as well. So protocol layers, some terms you want to know here. So liquidity pool. This is typically, 2 or more coins or tokens that are joined together that makes a liquidity pool. If you provide liquidity, so like I'm a liquidity provider, I think some of you also stake your liquidity provider. So you are depositing your assets on that protocol to provide that liquidity. That's also staking. So staking is the action of being a liquidity provider. And then yield farming. So every time someone interacts with that liquidity pool, I'm earning a percentage of the value that stays in the pool. So that will increase the value of my liquidity token. Any questions?
Yeah, typically have like a time frame that you stake for, like maybe a long term.
I would stake forever. I'm not gonna ever unstake. I'll switch between pools, but I'm not gonna. I don't really leave assets unstaked. So, yeah.
Do you stake NFTs as well?
I do not stake NFTs. That's like 300 level course, but yeah. I know what you're talking about. All right, and then the asset layer and settlement layer. So that's just your coins, your tokens, and the blockchain you're on. So a coin is basically a storage of wealth. That's the only thing it does. So like Bitcoin is like the quintessential coin. Like can't really do anything other than store your wealth in Bitcoin. A token, essentially I think the main difference between a token and a coin is that it provides some other benefit like platform governance. So you have voting rights based on the share of the token that you own. So if there's like, say you own a bunch of Uniswap and there's a proposal you don't like, you can downvote it, and your weighting of however much you own is the downvote that receives. And the blockchain, there's several different blockchains. I think there's proof of stake, which is like Polygon is one that's settled on the Ethereum blockchain, which is now a proof of work, but will transition to proof of stake. And then, Bitcoin, obviously, proof of work. There's Helium. I don't know if everyone knows. There's a Helium miner out there, so proof of coverage. And there's like 𝐥𝐤, which is proof of time and space. I don't know if you are familiar with that one, but that one's a pretty crazy one. Does everyone know? Everyone knows like proof of stake, proof of work. Like that's okay, good. All right. right, so hopefully I was able to explain the difference of DeFi and TradFi, and then the DeFi stack basics. And then what I really want to show is the aggregation layer. So beefy.finance is a aggregator. It runs on top of all these applications. So if you use beefy.finance, you can interact with basically any DEX that you want to. So it runs on top of Uniswap, SushiSwap, 𝐥𝐤𝐤𝐞. A lot of them are called Swap, PancakeSwap. They're all basically forked off of each other. So, but yeah, it's pretty cool. All right, so sorry if I do some demos. Okay, all right, I have to sit down for this. Sorry, apologize. All right, so here's the beefy.finance landing page. It is a multi-chain yield optimizer. When I first started on Beefy, we were only on 5 chains. This first 5 there, but now we're on 12. I don't even know all those logos, like Binance Smart Chain, Avalanche, Polygon, Phantom, 𝐥𝐤𝐤𝐞, Moon River, Solana, and Metis. I missed some of those, but does anyone know the other ones that I missed? No? Okay, that's fine. So here's the Beefy token, currently at about $1,568. It is on all those 12 chains, and it is capped at 80,000. So it's kind of cool that they're not like minting more, not inflating it away. It's a hard cap at 80,000. All right, so beefy.finance is also a dApp. So you're going to launch the app. It's going to default to Binance Smart Chain. And you can see on Binance Smart Chain there is $206 million of value locked. On the Binance Smart Chain, they're purchasing about $5,000 worth of Beefy back per day. So they'll purchase it back from you. That's kind of how you share in the revenue. They use the platform fees to buy back the token, so your token appreciates. And here's some of the vaults. So there's 249 vaults on the Binance Smart Chain. There's a lot of different ways you can sort them. I like to sort by total value locked. That lets me know that the community regards that liquidity pool as safe. And you can see, so the PancakeSwap has, so this uses PancakeSwap. It is on the PancakeSwap app. So if you click on like add liquidity, I don't have a wallet. My wallet's not connected, so you can add liquidity on PancakeSwap, but stake it on beefy.finance, if that makes sense. If you stake your liquidity on PancakeSwap, you're gonna have to manually harvest your yields. So you have to like remember to log in and like click harvest, and then it goes back into your wallet. You can restake it. It's really painful. Beefy does it all automatically for you at the optimized rate. So it's compounding like minutes to hours, and it's all, they do it all for you. Smart contracts. What's that? A lot of people know Beefy. How long? Oh, so about 8 months. I've been a member of the DAO. Yeah, so I tried some other ones. I tried PancakeSwap. I tried, if it remembers, like Iron Titan, Iron Finance. Anyone remember that? Okay.
So does Beefy only use smart contracts that like its main purpose, or is that other like other things they do as well, or is it just smart contracts?
It's right now it's yield farming. Okay. Yeah, optimized yield farming across the main thing for Beefy is it's on 12 chains. Okay. Yeah, so we'll get into that a little bit later.
Are there other aggregators, or
there's other aggregators as well. Yeah. They don't all end with finance. So let's go real quick. So this is DeFi Llama. So I don't know if anyone can see. It might be too small, but it goes across all the DeFi and tells you like which dApp and how much total value lock they have. So Convex Finance is one of the OG yield farming platforms. It is on Ethereum only, and they have over $17 billion of value locked. Beefy is the third by total value locked, with only about 1.2 billion right now. But there's other ones like Badger DAO that rides on these 3 chains. Another one that was sort of a beefy competitor was Auto Farm. So similarly, they automatically compound for you. They're on 15 chains, I think, but they have, you know, their TVL's fallen to only $270 million.
What was the interest per month on the Beefy?
The interest per month on the Beefy. So
Or how does it work? Excuse me.
so interest per month. Well, that's we'll go back here. So this is the just PancakeSwap pool. It's 71% annual percentage yield. And I don't have my wallet connected, but part of that is from the pool and part of that is from performance. So the vault has a native APY and then there's also performance fees. So if people are interacting with it, the higher the performance. So you can expect to get 0.14% daily. So if you have like $1,000 in it, you'll get $14 a day, essentially. Yeah, but you know, 𝐤𝐤 is its own token. The price fluctuates. Yeah. Another one that people like is this. I don't know if people heard of 4Belt. So Belt is a platform on Binance Smart Chain. You stake these 4 stable coins in one liquidity pool, and they try to have 25% of each of the Binance USD, Tether, US dollar coin, and DAI. And that's, you know, the APY is really low, but it's really safe. So you're gonna pay for. There's a good risk premium on things like 𝐤𝐤. Beefy, similarly, it's not an outstanding APY. You can sort by APY and see like crazy things like, you know, 3% a day. It's, you know, over 10 million APY. And part of that is because of inflationary tokenomics. So the whatever D-share platform is inflating their token, so they're giving you more tokens, but those tokens are also dropping in value. It's just like a way to stay away from those. Yeah, like, don't do that. But so I like to look for a nice mix of total volume locked and yield. So, you know, anything over $1 million, I'm pretty comfortable with. Sometimes there's boosts. So this one's boosted right now. So the 𝐤𝐤 and BNB, which is like the Binance token for the Binance Smart Chain, it's being boosted right now. So looks like Dibs Money is boosting it. You can further stake that token to gain the boost, which is, it's like a whole nother level. So
That's actually something I'm not really familiar with. How does the boost function work?
okay, so when you deposit your 𝐤𝐤 or your BNB, you're going to get the 𝐤𝐤 BNB LP token back. That's the token that stays in your wallet. Your assets are on in the smart contract. You get a receipt essentially. You can take the receipt and stake it for the boost. So you give them the receipt, you get another receipt saying, hey, your receipt's being boosted, and you're earning whatever the boost is. Let's click on the boost. So you're earning the D-share token. So D-share is probably some AMM or DEX platform, and they are rewarding you in their native token for staking your 𝐤𝐤 BNB LP on their platform. Does that make sense?
They are transparently, but like artificially providing incentive to increase their TVL.
Exactly. So they have in advance donated whatever amount of D-share to beefy.finance to award the boosters. So if you, I don't know if I don't have my wallet connected, but so you can see there's about, and this is the LP number. This is not anything other than there's 18,500 𝐤𝐤 BNB LP token receipts staked, and you know, however many you stake yourself, you'll see a pool share, and then that's the boost APR. So you'll get, you know, 33% per annum on whatever you have staked in the boost.
So this seems like something. How long do these boosts typically last?
This one is for 7 days remaining. Sometimes they're like 2 weeks, just depends.
So it seems like it's definitely not sustainable.
It's not sustainable, no. It's just like incentive to be like an early adopter. Yeah.
That's interesting. I've just never seen it before, but it's actually a really interesting idea.
Yeah. So it's called the launch pool. We do a lot of launch pool partnerships on all 12 chains. Just there's one on Binance Smart Chain right now. So another thing I like to look at is this thing called Coindicks, and it is just another aggregator that looks across all the sort of yield farming platforms to see which pools are offering the best yield. So you can see on like Phantom, there's this Tomb FTM pair that's, over 1 million. We saw the over 1 million, the 10 million APY on Beefy as well. So I don't know, I'll choose Beefy. Well, does anyone have a preferred chain that they care about? Anybody? Cardano's not on there yet, so.
Solana.
So I've been noticing that Ethereum gas fees are like extremely high.
Yes.
If you exchange it for like a BSC token, then send it on the BSC chain, because typically BSC is a lot cheaper. When you swap with that coin, will it just make the price go up and match what it should be for Ethereum, or it's still going to be relatively cheaper?
So we're talking two different things. So Binance Smart Chain is its own blockchain. That's a BEP20 protocol. It's its own token. You're not going to be able to transfer without like a multi-chain thing from Ethereum to Binance Smart Chain. Yeah. So if you want to on-ramp onto Binance Smart Chain, you're probably going to want to use like Binance US or something like that. Yeah. If you want to on-ramp to like Polygon, you can go straight from like crypto.com. They have some of the other ones, I think, can go like Gemini maybe is going to go straight to Polygon eventually. So I use Polygon because I can't afford Ethereum gas fees. But so let's just click on Polygon just to see what we got.
So will 2.0 reduce those gas fees or no one knows?
That's the hope. So with Ethereum 2.0, you're gonna we're gonna introduce sharding, which is supposed to take care of some of that throughput issues that lead to those high gas fees. What's that? Tron's no better. Tron's no better. I don't use same fees. So the number one, I guess, for total value locked on Beefy Polygon is the 𝐿_USDC pair with a base APY of 25%. So you're going to earn 25% on your liquidity that you provide per year. So if you provide $1,000, you're going to get $250 back if you leave it for a year. So does everyone know what 𝐿 is? So 𝐿 is the 𝐥𝐤 Memetic. It's their stable coin. So 𝐥𝐤 is a lending platform, so you can stake your whatever asset and get 80% of that value back, whatever you want to use it for. A lot of people kind of loop that over and over and over until they have like this crazy like levered position. I'm like, I can't, I'm not smart enough for that. So yeah. Anyone have any more questions?
I'm just kind of unfamiliar. I know it's huge with Curve.
Yes.
You down there, you have any experience with it?
I use Curve mostly, so.
I just haven't really used it. I know it's enormous, so it might be worth touching on.
Yeah. I don't know if I'll be able to interact with Curve. I don't have my wallet connected, but so here's a really popular Curve pair. I don't know if I'll be able to get there or not. So this pair uses 1/3 stablecoins, and the 1/3 stablecoins is divided into 3. So it uses DAI, USDC, and Tether. It's 1/3 wrapped Bitcoin. So it's a Bitcoin that's not on Bitcoin mainnet. It's been wrapped. So now it's on the Polygon blockchain. And it uses wrapped Ethereum. So it's Ethereum that's now on Polygon, not on the Ethereum mainnet. So gas price on Polygon, you're looking at around 30 𝐽 per transaction. That's about, I think right now it's like 3 cents to do something. Advanced options, I always set my slippage to like 0.1% because I don't like to get a big reduction in what I'm staking. And you can kind of see here what's in the pool right now. So there's about 100 million worth of those assets, and you can see the breakdown percentage-wise. And there's some of the fees and stuff involved. So, but if you're staking this, you're getting 30% Plus, you're also getting hopefully price appreciation for Ethereum and Bitcoin. So this is one of my favorite ones right here.
So you have to provide equal amounts of those 5.
You do not.
Those 3.
You do not.
I can put in just my wrapped Bitcoin.
You can put in just your wrapped Bitcoin. You can put in just your DAI. You can do whatever, and it'll break it down for you. You'll get a token back. You'll get a receipt back saying you own, 11% of this, 11% of that, 11% of that, 33%, and 33%. So you could redeem it's all split up evenly, and you can redeem any way you want to. You can take it all back in Ethereum. You can take it all back in USDC. Yeah, I think Curve is one of the best ones. They do another one.
So then because you're just on the Curve site there.
Yeah, that's the Curve. This is Curve site.
Why wouldn't I just connect my wallet here to Curve?
Okay.
Why would I use beefy.finance?
All right. That's a good question. Appreciate you asking that. So when you create the LP by depositing on Curve, you can stake it on Curve, but you're gonna have to manually harvest your yield. So you have to like go back every day and say harvest yield, and then like restake it. If you go to Beefy, it does it automatically.
You have to harvest daily?
Or whatever you want to. You have to harvest manually, yeah.
Well, if I'm like you and I'm never going to take it out, why don't I just harvest it in 2 years?
Because what you have gained is not staked.
Yeah.
At that point. And you want to stake. You want to stake your gains.
You want to keep, it's like a dividend reinvestment program.
So Beefy, the aggregator, continues to restake your new gains.
My
so
25% automatically.
Yes. So it's like exponential growth.
Unless you got time to go do it every day.
Yeah, then you don't have to worry about it. Like you set and forget it. Yeah.
What do they take out of that?
So Beefy takes a fee. It's I think 2% right now. It depends on the vault as well. So it's like 2% of what you gain. So if you make $1, they take 2 cents. So and they're also using that money to buy back the Beefy token. So if you own Beefy, it's like win-win.
That's what I was going to. Can you talk more about that? So like they're taking their daily fees and just running a buyback on the Beefy token?
So
that's what they do with fees?
That's part of it. So they also maintain a treasury to like pay for other things.
That was my question. They're hard capped at only 80,000 of them, so they can't.
Yep. Yeah, they don't burn them.
A lot of other protocols buy back and then burn.
Yep.
Like an incentive to hold long term. That makes a lot of sense.
Yep.
They're deflating their token. Another spam call.
So
since they only have 80,000, they can't be burning them.
Nope, they don't burn them.
So what are they doing with them?
So when there's a proposal from the treasury, they'll sell the tokens if the proposal gets approved. So like right now we want to spend $30,000 for stuff at Consensus 2022. So we can all vote like, yes, that's a good use of our money, or no, that's not. So if we all vote yes, 30,000 of Beefy goes out to the free market, and they take, the 30,000 fiat dollars or whatever Consensus needs to operate. So that's what that's for.
It's DAO governance.
It's DAO governance, yes.
How much are they buying a day? Can I see that on there?
Yeah, so that was there. Each chain is different. So they're buying back $1,160 worth on Polygon. On Binance, they were buying back almost 5,000. On Phantom, they're probably buying back like 15,000. Yeah. Yeah.
For a $1,500 token, and they're buying
Yeah.
20,000 a day.
They're buying $20,000.
Worth of it.
Okay, so
Yeah.
20 a day back.
Yeah.
Let's say,
Yeah.
Wow.
Yeah. So there's $1.2 billion locked on the platform. Like, imagine you're getting like, a fraction of that every day from performance fees. Like, there's almost like $10 million in the treasury right now.
Do they have a growth roadmap for those funds?
A growth roadmap for what?
For the DAO. Like,
For the
they're
DAO?
gonna spend that $10 million.
Whatever. We don't know yet. So it's all multi-sig locked. It's all whatever the DAO chooses. Anyone in the DAO can propose whatever they want to spend it on. So it doesn't have to come from the core team.
What was the price of beefy.finance
8
8 months ago?
months ago,
A year ago,
well, let's go for 1 year. So it's been up and down. Like it was almost 3,000 at one point. It was over 3,000. So it's kind of been trading in this 1,000 to 1,500 range for a while.
How long has it been around?
It has been around. I'm trying to think.
You said the max.
Yeah. Looks like October 2020. So it's fairly new. Yeah. It started out on Binance Smart Chain. It's basically when Binance Smart Chain started is when Beefy started.
So how do you see regulation with government?
So government regulation, it's decentralized, so there's no there's no entity to regulate. Yeah, exactly. So yeah, the multi-sig is geographically distributed. Asia, Europe, Australia, North America. So
Can you tell me how votes are actually organized? How does that work?
so on Discord there'll be a link to our essentially governance page, and you just vote yes or no.
How many multi-sig address holders are there?
I think there's 7 right now, and you need a simple majority, I'm pretty sure. So 4 people have to sign. Yeah.
Outside of the buyback, is there what is it called, like a dividend or something that I earn for owning the Beefy token? Or
That's the buyback.
Okay.
Yeah. Well, you can stake your Beefy as well and earn from that. So you can do we'll say Beefy.
I guess my question is, at some point, the Treasury could have enough money to where they don't need to buy back more Beefy. Like, why aren't they just paying it out directly to people?
So you can
Like, there's a difference between the buyback and a dividend.
Right,
Like
like
I received.
so they're gonna have to like airdrop you tokens, is what you're saying? That seems complicated.
I mean, if we're talking about it like an actual stock, like a public company can
Yeah.
buyback where they buy back the shares and hopefully the price will appreciate.
Yeah.
But they can also do a dividend where they just give me a percentage, like 2% or something.
So you can stake your Beefy and you can earn on that. You can also pair Beefy with like other coins, Ethereum, other stuff like that. So these are all the Beefy vaults on Polygon. So that's, I guess, one way. I don't really know.
do buybacks on that for those ones? Because then all the other swaps, they buy back a percentage of the money that they make from that, a Beefy token.
So if you own Beefy,
And you're staking Beefy, do they do any buyback from that particular swap? Or
it's all Beefy. So if Beefy is going up, your token value is going up, even if it's locked.
Because they're all aggregated to one basic price.
Yeah. Yeah.
Otherwise, there'd be huge arbitrage opportunities. So. Right.
Yeah. Yeah. Awesome. This guy could teach a class.
When are you teaching a class, by the way?
Oh,
last week, yeah.
You missed, man.
Yeah. So another one that I like from Curve, I'll show it. Because I was living in Germany, like I had to pay so much to transfer my US dollars into euros. All my bills were in euros, and I got paid in US dollars. On Curve, there is a euro stablecoin that you can withdraw in euros and send straight to like your N26 bank account. So, yeah. Yeah. So you don't have to pay like whatever the fees. It's Polygon gas fees. Yeah. If you withdraw it, maybe it's like 0.001.
What were
Yeah.
your fees on like just a traditional swap?
It was like 4%. It was huge. Yeah. It was ridiculous. Yeah. Because yeah, you can withdraw it all in euros. Like you're gonna get 25% of each in your. You can deposit whatever you want and withdraw whatever you want. So.
There are a couple of centralized exchanges that offer similar function, but for fees that equal fiat, basically.
Yeah.
3 to 5%. So that's actually a really good method for forex exchange.
Yep. You're gonna see more of that. There's a platform called Jarvis that does like yen and Swiss francs and all kinds of stuff. So I don't really have anything else unless there's more questions.
I have a question. I'm just curious. I just want you to give me your opinion. Do you think that Polygon can flip Ethereum because of the gas fees if they don't resolve those issues?
Well, I don't think Polygon will ever flip Ethereum because Ethereum is the settlement layer for Polygon. That'd be difficult.
Polygon can't exist without it.
Yeah, yeah,
Okay, so it's on, okay.
yeah, yeah,
It's what we call a layer 2. So
Oh.
yeah. But it's not a true layer 2. It's a side chain.
yeah.
So yeah,
Essentially, the transaction occurs on a lower fee, slightly lower security, quote unquote, network, and then settles back to Ethereum.
Okay.
yeah,
So Ethereum is still remaining this.
yeah. You need Ethereum.
Well, it's one of them that said that they could flip it. I think it's 88. That's the one.
So
We have an 88 maximalist.
yeah, I won't say anything about ADA. I don't know. There's too much being built on Ethereum. I don't think Ethereum's gonna, it's Ethereum will probably flip Bitcoin before any other chain flips Ethereum. So a lot of protocols or a lot of chains use the ERC20 standard. They're all EVM compliant, which means Ethereum Virtual Machine compliant. It's basically like one giant computer at that point. Yeah.
You said when you're looking at which ones you can go with, you said above $1 million GBL.
Typically.
Any other things you're looking for as you're deciding? Like you said, I mean, you're
So
attracted to like pancakes at 70% right now.
I don't like pancakes just from like bad experience with pancake.
That adjusts all the time, right?
I guess we can talk. Yeah, we can talk about some of the bad things about DeFi. So Beefy is going to save you from this. I don't know if you've ever been to Wrecked News. There's all kinds of like exploits in DeFi right now. So let's see, like the number one hack or exploit was the Poly network. So it was unaudited. So you want to look for audited projects. Beefy vets all their projects for you. They have experts in Solidity, experts in Rust, experts in smart contracts that read through the term, like all the language in the contract to make sure you're safe. But this one, like, $611 million went missing. That's people's money that was essentially stolen through like flash loan arbitrage. This is like really complicated stuff we're talking now, but it's yeah.
So if you're seeing something on this list like Bitmart, you're saying just stay away from it?
Yeah, anything that's like, some of these have been on here more than once. Like I think like Cream Finance has been wrecked like 3 times. Like why do people still?
Some of these are centralized exchanges as well.
Yeah.
Correct. So this isn't all
Yeah, Crypto.com's on here too, I'm pretty sure. Yeah, Pancake Bunny, so that was like a fork of PancakeSwap. Like it's fine now, but I don't know, it's just bad experience. Like I have a grudge against Cake.
Maybe worth touching on like custody. Just making sure people understand that like when you're farming, essentially you're giving up custody of your asset.
Yes.
It is technically quote unquote.
So when you are depositing your asset into LP, the platform owns that. You get a receipt. You can give them the receipt back and take your asset back, but that money is on the platform.
They end up on this list of money.
Yeah.
So it's not for it's
Yeah.
essentially like putting your money on.
You're going to need a hot wallet to interact with these things. You're going to need a MetaMask or another Web3 wallet. You're going to have to be comfortable with sending your funds from a centralized exchange on fiat on-ramp like Coinbase or Gemini or Kraken to your hot wallet, and then signing transactions. Like the nerve-wracking anxiety portion of it never goes away. No.
5-day waiting period.
So on Polygon, like there was like a thing called Sunflower Farmers that was like taking up all the throughput, but usually it settles like within a few minutes. So
The one KuCoin, so it's not safe to buy anything on KuCoin yet?
It's my main exchange.
so it's probably fine. It's just they had a $45 million exploit at one point in time.
That was a Solidity build, realistically, so it was an EVM but don't worry about it. It's fine. That's
Yeah, so the platform KuCoin like reimbursed their users, but some of them don't have. Some of these are decentralized. They don't have any like VC backers to help them. So.
What I was trying to point out just primarily is that anytime you put your stuff up into a contract or into a farm, into a yield, theoretically you're no longer holding it in your wallet that you have practically still at that point in time. So it's only either there's
Yeah, you're holding a receipt.
different than staking where you can take it out anytime.
No, you can anytime you take your receipt, give it back, and get your assets back.
Right. Plus the interest.
Plus the
Or
interest,
staking,
yeah,
you
yeah,
use it
yeah,
for
yeah.
a buck or whatever.
Yeah.
Okay.
Fully voluntary anytime, and they all, I think their like rules more or less change a bit depending on the platform. So we may have like a lock-in period or may not. I think.
Yeah, so there's no lock-in period with Beefy. So like sometimes when you stake, you have to agree to like have your tokens there for 30 days or like some of them are like 3 years. I'm like, who the heck does that? Yeah. So
I have one.
go ahead.
Okay, so I know like just the basics of it, but when people are staking and farming, now I've been researching online and they've been talking strongly about this one called Strong, and people are like, I guess they have nodes or something like that, and they're making so much money, like for passive income. I'm just trying.
So is Strong its own blockchain? Sounds like its own blockchain. So proof of stake blockchain. If you operate a Strong node, you're gonna have to stake a certain amount of Strong to be a validator,
Right.
and you validate transactions, and you earn a portion of the fees that way. It's kind of like Bitcoin mining, but instead of having like a GPU, you just stake your Strong tokens and earn from validating the transactions.
But if I'm not correct, you incorrectly validate something, like take that coins away from you.
Yeah, so if you are a bad actor and you do something wrong, they'll slash your stake and they can take Strong. The network can take Strong tokens away. So it's a game theory incentive to
Make everything fair.
make everything fair. Yeah, you don't want to send a bad block out to the network. You'll get slashed.
I just need to learn how to get stuff. But how much does it cost to start a node?
So I don't personally run any nodes, but you're going to want to go to that project's website. They'll have docs, and they'll tell you what the minimum like system requirements are and the minimum staking requirements. So to run like an Ethereum node on ETH2, I think it's like you need to stake 32 ETH. So that's what, like, it's over $100,000 now, or almost $100,000. And you need like basically a really high-end computer. Like you can do it with a desktop computer, but it has to be like, I don't know, 2 terabytes solid state hard drive. You need like a, what's that?
Yeah, they usually disclose.
Yeah, they disclose what you need. Yeah.
So go to their website and look up their white paper.
Yep, and it'll tell you.
And
Yeah.
also, like, you have it hosted in your house, might not be that great because it might be like hogging up all your bandwidth. Your bandwidth might
Oh,
be fast.
Yeah.
Also, the power outage too. Sometimes there's like penalties if you're not like, on the network. So you might want to actually be hosting at like a server farm or a proper place.
Yeah.
So it's a bit more complicated.
So I tried to do it on like AWS, Amazon Web Services. Like it's not capital efficient. You're gonna have to like really want to spend money to validate. Like I don't think you're ever gonna see any returns that way. But I don't know. I don't really know like much about that.
Okay, thank you.
I know the mechanisms of it. I haven't really done it myself. So.
Thank you.
I have a Apple platform that I can recommend to you that I've used for the last year.
Oh, okay.
They have smart contracts, they have mining. You can pay 7 days a week and passive income.
Okay, thank you.
It seems like a really good idea that Beefy has all these chains. Like, why doesn't what the other ones on the list, like Yearn or Convex, implement these?
They don't have the expertise to implement those chains. Yep. A part of its governance too. Like the holders don't want to expand or think they're doing fine.
Is there any other criteria? Like you said, DVL above $1 million. You just look to make sure it's not some.
If it's on Beefy and it's been like running for a while, like it's probably fine. Like.
So why not? I mean, why not Cake? It's
So
Guy.
that's subjective. That's my opinion. Like not financial advice. Yeah, I probably should have said that earlier. Like this is not financial advice. This is educational only.
But in my mind, Cake is not stable. Then I mean, it's like.
So Cake is an inflationary token, and they do like the weekly burns. But when I saw Cake back in May of 2021, it was I think almost $40, and people were like, "Oh, Cake to $60," and now it's like $10. So it's like, I don't know. It's just.
All right.
I don't really know.
No other criteria.
Yeah.
For you, as far as just.
So I would say like stick with what you know. Like research a project and whatever looks good to you. I'm probably 90% in stables right now because of just. I rotated back to stables when Bitcoin hit 69,000. So I'm like, I don't know. Every time it gets topish, I get nervous. So I have a high risk preference, like low risk tolerance. So.
So what's your opinion about Bitcoin? Where do you think that it's going to head in the future? I mean, I know you can't predict it, but because now
Chart's gonna keep going to the right. No.
other countries, you know, once it becomes, you know, global. Well, I know it's global already, but I'm saying like when other countries pick up on.
So I know the Bitcoin beach guys are doing stuff in Costa Rica. I also want to say like Paraguay, like they're doing more experiments in those countries.
Well, we know we got El Salvador.
Well, El Salvador, yeah.
They're on.
It's not completely Bitcoin. It's legal tender, yeah, along with the U.S. dollar.
I thought one country just went to completely, that was going to be their sole currency.
Essentially the government in exile in Myanmar, like Tether is their official currency. So.
In
Myanmar, yeah. But I don't know. I don't really know of any others. I know Nigeria tried something on Tron. They tried to do their own CBDC, their central bank digital currency. I don't think that worked out very well.
Any other questions for Andrew? All right, if that's the case, then I think we're going to be good to wrap up.
Yeah.
Thanks
for having me. I didn't realize I knew so much about yield farming until right now. So.
If anybody wants to get a hold of you, do you have maybe a slide with your contact information?
Should put that on there, shouldn't I? On LinkedIn's probably good. That's where I write the most. So, I don't know, how do I go to my profile?
You got it right there.
Yeah, so that's me. I work for the National Geospatial Intelligence Agency, so downtown St. Louis.
Your business card?
I don't have a business card now.
How did you find this?
I saw it on Reddit. I wanted to come on my birthday, which was the November 22nd, but the house we bought in Creve Coeur had like a plumbing thing, so I had to deal with that instead of come here. I've tried to get out here several times, just haven't had the time until yesterday. So I think I saw it posted on Reddit on like because when we were house hunting, we were looking in St. Charles as well. So I joined like the St. Charles subreddit, and someone was like, "Oh, Bitcoin's cryptocurrency store opens in St. Charles." I'm like, "Oh, that's cool."
Cool. All right. Thanks again, Andrew. I want to let all of you guys know that we've got the Bitcoin over beer event this upcoming Thursday. So that's the third Thursday of every month. So it's going to be this upcoming Thursday. We're going to have food and drinks. We're going to have a big panel up here. I think we're going to have like 6 people. But we're structuring it almost like a game show. Right, so I'm going to give everybody in the audience tokens, and I'm going to ask the same questions to everybody on the panel, and then the audience is going to vote with their tokens, and the audience favorite speaker is going to win a prize at the end. And then after that, if there's still time, we might do a trivia game with volunteers from the audience too. So that'll be a pretty fun event. Hopefully you guys can make it. If you can, please bring friends too. We want to pack this room. We want to pack the front of the house too.
You're going to put out an announcement on that email?
Yeah, yep. So we're going to put it out on the Eventbrite again. That registration is just due to head count. So if you guys can register on the Eventbrite, please find out how many people will expect food to get. That's going to be Thursday from 6 to 8:30 p.m.